And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Wednesday, July the 20th. I'm John Hoagland. Thanks for trusting me with your time. Well, our stocks on a stairway to heaven? I sure hope so, for the sake of all of our retirement accounts. Well, you're going to have to wait and see. As always, we're focusing on context, risk management, and patience on a day-to-day basis here this morning and every day. Today's National Hot Dog Day. Get yourself a hot dog for lunch today, maybe. As far as economic numbers are concerned, we had the mortgage information come out very early this morning. The 30-year mortgage rate, 5.82%, and applications down 6.3% last month. A sign of potential slowing of home sales. We have existing home sales at 9 o'clock today, 9:30 EIA Petroleum Status Report. Canadian CPI came out today. It didn't look too bad as far as I can tell from what I see and from what I know. As far as things I'm focusing on this morning, we've got our stocks opening a little bit lower today, steady to lower after a breakout day yesterday. Another look at the housing market again today. Earnings season continues to ramp up. This morning we had Abbott Labs and Elevance Health, and we are looking for Tesla and CSX after the close. Crude prices have leaked a little bit lower overnight after the API announced a 1.8 million barrel boost last night. The EIA is forecasting a 1.3 million barrel boost. And of course, there is the specter of potential weakening in demand. And as always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. And taking a brief look at the VIX, the dollar index, and the 10-year yield this morning. The VIX was off just a little bit at 24.44 last I checked. And the dollar index 106.97, a little bit higher on the day. And the yield on the 10-year about 7 basis points lower at 2.95% after dancing up and above and below that 3% level in most of the evening. Looking forward to a challenging and interesting trading day today. Of course, we're always looking forward to that. That's what we have here on a daily basis. We don't know what the outcomes are going to be. It's our job to look for opportunities and manage risk in and around those opportunities. We're always looking for the asymmetric trade, small risk for bigger rewards. At least that's the way I address these things. Got to say good morning to everyone. Brian, first in the room. You win the prize this morning. Charles March, Scott saw, and he conquered. Shaw Cunningham, good morning. What do you think about this gap in the ES above 39.50-ish? Well, we've got that swing high from late June that is exactly, what is that? Well, we're going to look at this shortly, but I'm going to look at my notes here. We got that swing high. 39.50 is the exact number of that swing high. We looked above it last night. Markets don't like to leave recent highs and lows in overnight sessions. We've got an opportunity for us to perhaps look for a weakness to buy in the S&Ps and in the NASDAQ and the equities today. We're going to have to take a look at that in the charts shortly. Good morning, Theo, Tachyon, Patrick, my brother Rick, love you, good to see you. Rob T, chilling with Dylan, Bob Broder, Elvis is in the building. I was wondering if anybody had seen that film. I'm going to probably go and check it out maybe over the weekend. I was always a big fan of Elvis. Bill Phillips, Andy Bleed, John Doherty, good morning, JD, Jan R., Michael Knight, Chris Johnson, Hjorg, TCDA, TST, JST Wave, Sarah Hall, good morning, prayers, love, and rainbows to you as well. Dimitar, good morning, Terry King, Grim Reaper Trader, protect your profits, traders. I would hold off on the NASDAQ 100 until after the bell. Zoran, Grim Reaper Trader, Gerald, Dr. VJ, Rob, good morning, good to see you. Andrew Hennessy, good morning. Vince, it is a beautiful morning. I think I'll go for a walk outside, to quote the Brady Bunch. Joe, you're back. Good to see you. VIX expiration, 9 o'clock. We also have crude expiration, which always makes me remember about 3-4 years ago when crude expired negative. I don't see that happening anytime soon again, but we never know. George, good morning to you. Lacey's around here somewhere, laying around, just being lazy. Rusty Golfer, my spirit animal, good to see you. Ted, good to see you. Jordy, Amos, Haggle Matters, Rob Crust. I'll do it with you, Vince, right? Trading Research, Mike made it to 3960 or so and was presented with a resistance area 2 years, 6 months, 1 days from 1920. Grim Reaper Trader, terrible movie. Well, we all have our opinions, and that's what makes these markets so good, isn't it? Want to trade? Grim Reaper Trader, see Top Gun instead. I saw that a couple of days ago. I saw that Sunday, and it was a pretty good movie. I enjoyed it. The Rascals song. There you go. Beautiful morning. There you go. Hey, all I could hear was the Brady Bunch version. I think I'll go for a walk outside. The summer sun's calling my name. All right. Well, as we view these markets in context and thinking about risk management, we've got a considerable walk for us today. Always looking for opportunities and ways to limit that risk. We're getting a good start here early. Any other? We announced it yesterday. You guys heard it first. We now have a 90-10 profit split. So when you take money after the first $5,000, you're going to get 100% of that. After that, you're going to get 90% instead of 80%. Big news yesterday. We were very excited about it. Hopefully you're excited about it. We know how difficult this is. We want to reward our traders, and we are looking forward to starting to send those payments at 90%. And remember, that first 5K is 100% yours. So again, big announcement. Looking forward to starting to send those payments out. All right. Let's jump into the charts. We've got the daily in the S&Ps up here. Let's take a look. Fascinating day yesterday. It's going to be another fascinating day today. Yesterday was such a fine example of we've been range bound. We fade the extremes of range bound until we find acceptance outside of range, and then we go with it. We had a pretty emotional move yesterday. That breakout brings an increase in open interest. Volume was pretty good. It was about the same as the previous day in New York, almost exact. So we didn't bring a whole bunch of volume in New York, but in futures we did bring in a little bit higher volume, and we added approximately 27,000 in open interest. So this is a bit of a change, ladies and gentlemen. We've been seeing rallies that have been hollow. They have been more like short covering rallies where we lose open interest on all these little rallies that we've seen since we've put in the low. This is a bit of a change. This is an increase in open interest. Now, this means that rally yesterday is likely less hollow or not hollow at all than the recent rallies we've been having, but it still seems a little bit fragile. It seems that it seems to me like this market is still kind of like a sore toe. If you have a sore toe, you're going to bang it on something. I'm just wondering what the next thing is going to be that's going to create doubt in the S&Ps. Yesterday, it seemed like it was back to its old tricks where we would get short time frame traders short and then run it up on them. eating shorts throughout the entire session. That breakout rule brought a fruitful session for us yesterday. Even if we lost a little bit on the short against the high of the balance area, if we were quick and smart, maybe we got into a long that finished out pretty much close to the high of the session by the end of the day. Now, this day, we ended the day with positive approximately 40,000 in delta. In other words, aggressive buyers were increasing delta throughout the entire session. Delta is the number of contracts that trade on the offer, which is positive delta, minus the number of contracts that trade on the bid, which is negative delta. So on this day, we added 40,000 in positive delta by the end of the session. The next two sessions, we had negative delta as the market continued to try and push higher. We pushed higher on this day on negative delta. We had negative delta, which makes sense on Monday, but it was a higher range and a higher area of value. Even though the direction of the day was negative, the implication was higher price, higher value. Negative delta on this day. By the end of the day yesterday, we would be thinking, because of the aggression, the emotion, all of the directional activity we had yesterday, that we would be looking at a large positive delta, and by the end of the day, delta was positive 78. 78. That's it. That's all the delta. What does that tell us? Well, there's a number of different ways that longer time frame buyers can adjust inventory, and they try not to do it on directional days, but they will do it on directional days if they have to. With the open interest increase yesterday, my thought is we did create a situation where the longer time frame traders needed to adjust inventory, either to get out of shorts or to adjust into longer positions. That's why I think we ended up eating short time frame shorts. The traders that were trying to pick tops on this all day, we ate those shorts all day long. The reason that I think that the delta is neutral is the technique that the longer time frame traders used yesterday. There's ICE orders where they'll just place bids and replenish those bids and replenish those bids and replenish those bids until they don't get filled there anymore, and they'll move those bids up, and then they'll buy there and just keep pressing, and that creates negative delta against direction. That's the delta divergence that we sometimes see and that we sometimes talk about. So my suspicion is that they used a different type of order. They call them growler orders. They'll place the bids. As soon as the bids are filled, they'll let that price go offered about the same amount that they just bought, and then they'll lift the offer. So they keep delta neutral. Okay, so I see, Mike is speculating it was probably mostly short covering. Mostly short covering, we should lose open interest where we added open interest yesterday. Indicates new buying coming into the marketplace, which is an expected behavior on a breakout outside of an area of balance. Okay, so what does that mean for us today? Well, we've got overnight inventory a little to the short side. We're going to be opening in range and in value. Think about the things that we looked at yesterday that didn't happen. We had a late spike at the end of the day yesterday, or the day before yesterday. We opened above the late spike, which tells us, okay, we're rejecting lower pricing already. The market opened. We opened in an area of repair. We fell short of reaching the repair levels below. We reached the upper repair level relatively quickly. Then we had to contest with the trend line here, last week's high, all of this information here. Why is this thing not? I'm assuming that was last week's high. When we broke out above this and accepted, we saw more buying coming into the market. The additional open interest again tells me that there's more to this than just short covering. We saw a lot of short covering on rallies off the lows, which made them kind of hollow. This is a commitment, I think, by some longer time frame traders that they've taken long positions, or, quite possibly part of that might be some short covering. So we're going to be opening in range and in value with some overnight inventory to the short side. I'm going to have to try and stay patient today. My dream level is if we can get a pullback back to the area of the initial breakout to see if we can continue to see longer time frame buyers at that level. Again, opening in range and in value, we've got potential for repair. We got single TPOs here in the market profile chart. We opened in that area, high volume node here, high volume node here. Again, we have new information coming into the marketplace in existing home sales at 9 o'clock. Not expecting that to be tremendously effective or impactful on the market, but I've been wrong before. So I'm going to try and stay patient, and I'm going to really see if I can find an opportunity to buy this market as it exhibits weakness, because I think this initial move to the upside is a potential change in direction. Now we're looking at this swing high here from the 28th, which is exactly 39.50, as was mentioned in the chat room. We looked at it yesterday. We could not get to it. Relatively close, within $2. We looked at it last night. So now we've got a situation where we've got the overnight high past a regular trading hour session high. Recent highs and lows that occur in the extended trading hour session tend not to remain. They tend not to remain, until they do. We were talking about this all the way up, where we would put in a new all-time high in the overnight, and within a day or two, we were putting in a new all-time high in the regular trading hour session. So we got to keep that in mind. To me, the tint is to the upside today. If we can get above that 39.50 swing high, there's lots of space that could take us really, all the way up to weekly kickoff high, which is 40.75, a pretty substantial move, 125 points. I don't know what's going to happen. I wish I did. I wish I could say, let's just close our eyes and buy because it's gonna go higher today. But nobody can do that. Nobody would be able to do that, and I certainly can't. Take a look at crude oil. I think we've missed the opening range here a little bit, but it's August expiration today, so we won't have to deal with the blur in open interest for a couple of weeks. We lost 17,000 overall, 28,000 of those in the August contract, which would indicate that the open interest in the future months, including the September month that we're in, was an increase. An increase in open interest on an up day indicates a healthy upside auction. We're getting kind of rich here in our area of the channel that we're in, and we're getting relatively close to weekly kickoff high. And this convergence here, if we get up there's going to be some interesting fireworks that might happen with this convergence of weekly kickoff high and this trend line. Overall, it's been building on the rally off the lows. We've just been kind of continuing to build open interest. Volume is, of course, increasing in the September contract because we're coming into the end of rollover, which makes that a little bit difficult to read. We, again, might be getting a little bit pricey in our channel and up near weekly kickoff high. Taking a look at the 30-minute chart, the overnight inventory is obviously short. We opened up here. Price is now here. We're still in range and value. We keep expanding this bottom of this channel, and now we're kind of parallel. So there is some maybe some validity to this trend line. There's only two real points of contact. We've got the beginning here, and we've got a third point of contact here. A whole mess of things going on here before the open. So I feel like we're kind of getting into an area where we're running out of steam to the upside. There's a whole lot of weak structure down below, naked points of control that have yet been revisited. We've got a gap here, we've got a gap here, we've got a naked point of control here, and a naked point of control here. If the buyers don't come in hard enough to get us to hold above weekly kickoff high, I think there's a pretty decent opportunity for a pullback to clean up some of this weak structure that we have down below. Let's see what happened on the opening range. The opening range has been so big. Okay, we're just taking out the high of it, 98.54 to, so we're we're around 60 ticks on this opening range. It's been so big, it's been inhibitive. So I'm not going to be playing it. So we're in range, we're in value. It's still thinking that we're going to find better trade locations as the day goes on. The last thing I want to do is start looking for trades, because I'm pretty sure I'm going to find them. It's the trade that comes to me and says, okay, here is your opportunity that I'm going to be patient and wait for if I'm going to be trading anything in crude oil today. On to the NASDAQ, similar but different. We've been saying that the NASDAQ has been holding up better than the S&Ps. We've got higher lows. We had lower highs until recently. We've taken out the swing high here on the 27th. Yesterday we closed above it. We're wrestling with it right now prior to the opening. And then we're going to have all of this space up here with which to kind of see this market run, unless there's some bad news. Whenever we're looking at equities, I always have to remember that if there's no bad news, these equities tend to just continue to grind higher. They grind shorts all the way up. We saw that all last year and the years prior, except for, of course, COVID. When we were putting in new highs, it's just the short time frame traders get short, they get run over, they get short, they get run over, they get short, they get run over. We've got a new recent high in the overnight session. Market's not going to like that. We're a lot higher in the range from yesterday as far as the 30-minute is concerned. We do have overnight inventory to the short side. The end of day delta yesterday in the NASDAQ, negative 17. Any longer time frame traders that were present in the marketplace yesterday did a very good job of hiding their activity. The growler orders, the ice orders, they both impact delta differently. If you have questions about either of them, those different types of orders, come to group coaching today. We're going to be talking a lot about delta. I've got an emailed in question about that, and I'm looking forward to seeing everybody there to talk about that. But if you have questions about the different order types that the longer time frame uses to try and hide their activities, we can talk about those in group coaching as well. I just put in the link. We have a bot here, it looks like. Remove. I'm not going to waste too much time trying to delete that crap, but I do apologize about it. So, group coaching, different order types that the longer time frame uses to hide their activity. Overnight inventory to the short side. We're a lot higher than we are in the S&Ps. Again, my kind of dream level is to see the market come back down here and test down to this area where it really is the kind of breakout area that we accelerated from yesterday. I mean, we accelerated before that. I was still looking for the market to remain range bound, took a loss there, found a way in, and ended up having a pretty decent day yesterday. So these levels do allow the almost joined the bot for more coaching. DA. So, that's the nice thing about the extremes of balances, because it allows you to limit risk and it gives you a little bit of opportunity to try and catch the continuation if that's the case. Breakouts from balance tend to be big opportunities. And we may not be done with that opportunity. Taking a look at gold. Volume and open interest continue to just get crushed. We lost another 6,800 in open interest yesterday. Look at these bars. Okay, we have got an inside the extended trading hour range today from yesterday. We're in day 5, day 4, day 5 of balance here. Very indecisive daily bars here. Lots of long shadows and short bodies here. This market is really just struggling to find anything, to find some sort of direction. It's on a back burner for me. I don't think I would be trading gold and then kind of feeling that way all week. Here's what we're looking at as far as the situation in the 30-minute chart here in short time frame. Look at how many times we got short in the overnight, back to settlement. We got short in the overnight, we went back to settlement. We got short in the overnight, we went back to settlement. There's no longer time frame participation here. It's the short time frame pea shooters like me getting too short and going whoops. Get too short and going whoops. There could be a pattern that could that could follow throughout the regular trading hour session. We don't know. But I'm just not interested in anything that's really going on here. And again, if this were a situation where the market were presenting in this context for a long period of time, I would have to adapt and find different ways to find good opportunities here. I'm just not ready to change gears on this yet, because I don't think that this is going to last for very long. So I got to stay patient and let the market do its thing. And when something changes, then I can re-engage in it. Here's the euro. My brother Rick called the low in the euro last week. He says, that's it. We got to start looking for longs here. And boy, was he right. We continued to push up against our weekly kickoff high resistance level. We looked at it in the overnight night before last. We looked at it in the overnight last night. Really just having trouble getting above it. We still had decent volume to the upside yesterday and added 6,900 in open interest. So it appears as though the market is presenting as good to the auction process, is appearing to be good to the upside. But we found some resistance. So here's the 30-minute chart. We could, no, we are not going to. Was looking at this saying, got a gap to it. We gap open and we drive lower. We've put in an island top. We have just now killed the island top. Here's 730. Yeah, so all we did was we just closed the gap. We no longer have the island top. Now it's a matter of, do we reaccept inside range and or value from yesterday, or do we reject and push to the downside? Both of these overnight opportunities up near weekly kickoff high are short time frame new highs. The market, again, tries not to do that. It does not like that. Let's take a look at the 10-year, which is a dead stick. The only thing I've got written on the daily chart is balance. Balance, balance, balance. Offers opportunity at the extremes. Anything in the middle is random. Try and avoid the juicy middle. We have some overnight inventory to the long side. It seems to be continuing to get pushed to the upside. We've got a visual up above in the naked point of control. We've got, there's a naked point of control down below as well. There's just nothing that I'm seeing in this market that makes me want to engage in it. We know that we've got 1, 2, 3, 4, 5, 6, 7 days in range and in balance and value. There's nothing I want to do in here because we're right in the middle. last week's high, last week's low, weekly kickoff high, weekly kickoff low. I don't see that there's anything really that important to get all that jazzed about. Very kind of similar to gold. FOMC is a week from today. We're going to have a little bit of wait time to see what happens, and maybe there'll be some more opportunities in the treasuries as that comes out. And afterwards, the natural gas, we lost 10,000 in open interest yesterday. Volume was pretty decent, but the market was an inside extended trading hour range. We've got another inside extended trading hour range. This market is idling, looking for new information. We have the nat gas release from the EIA tomorrow. What are we doing? What are we doing? It is in rollover. Today or tomorrow will probably be the last day we're going to be trading the August. We're going to have to move to September. The September contract this morning was about 1/3 the volume of the August contract, so we still got some time in rollover here in the nat gas. 30-minute high, low, day 3, in range, in value, overnight longs. Starting to maybe get a little bit nervous. The upper extreme of the balance area, lower extreme of the balance area. We've got weekly kickoff looming above for potential resistance or breakout above. Going to try and stay patient. I mean, we've opened with a gap. We've closed the gap instantly. That takes a little bit of the gap and go away from us. Somebody said yesterday in one of the markets, it was gap and crap, which would mean we would gap and then close the gap and come back into range and value. We do have the potential for a value area special situation play because we did open out of range. So if we re-accept inside value from yesterday, that it increases the probability of a move all the way to the low of value from yesterday at some point during the session today. We're not there yet. But it is something that we can look for, and some, at least a rule of a strategy we can possibly depend on. Orion, here's the link to group coaching. Now, one thing about group coaching is I messed it up and we had to create a new link for it, and then I messed that up. I think I've added the chat room, which a lot of folks were complaining because the chat room was disabled. I've enabled the chat room, but now I've got another situation where you're going to have to sign up or register for group coaching for every session. After today's session, I'm going to adjust that, and I hope it doesn't change the link. If it changes the link, we'll have to change all that and start over again. I don't want to do that, okay? All right. Trading research. Isn't it better to discern whether it's a short covering rally or not from more than one data point, such as open interest? For example, we have several P-shaped profiles to the left, and we're still within a trading range. Yeah, P-shaped profiles are typically going to be short covering, and you can verify that occasionally sometimes by seeing a drop in open interest. If there's not a drop in open interest, it may be short covering meeting new longs. There's a lot of different reasons why why I use open interest as such an important data point, because if we're seeing something in the profiles like the P shape, I would look for a loss in open interest on the following morning. Kind of similar to a lot of the rallies that we've seen off the lows in the S&Ps. They have not been bringing new business. They've been taking care of old business. We've been losing open interest on them. So that's all part of the auction process. When the market's directional but losing open interest, there's likely a change in the wind, if you will. Right? So, we come down. We have some up days on lower volume, losing open interest. Those are short covering days. The auction should not be considered healthy. It should be considered questionable, and in that case, because when we've seen those up moves with low volume and lower open interest off the lows here in the S&P, it's always been an opportunity for us to find an area of strength to see the market come back to the downside. Yesterday, I think there was a bit of a paradigm shift in that, in the fact that we have a big boost in open interest on an up move instead of losing open interest on an up move. It doesn't mean that the market is going to continue this move to the upside. It's going to take a continuation of buyers to come in and continue to increase open interest and volume as price moves higher and higher. When price continues to move higher and the volume starts to fall off, or particularly open interest starts to fall off, that's the warning sign that, okay, this upside auction in the longer time frame looks like it's getting tired. I may need to start looking for opportunities to sell strength, and maybe even buy weakness with that regard, until there's a directional change. Yes, I do see that. And it actually looks like it's actually here. Let's put that up there. So Trading Research is asking if I see a head and shoulders in the overnight session on the 30-minute in the ES. Looks like we had a measured move down. Exactly, Trading Research. This is a head and shoulders. Now, when we were thinking about the measured move, we go from the neckline to the head, and then a breakout from the neckline. This would really be kind of the target, because we got the neckline here. We can go from this neckline. So yeah, we had a measured move. We didn't quite get to it, which Trading Research can be important information. There's a lot of things that we were looking for to happen to the downside yesterday that didn't happen. So when we have an expectation of something happening and it doesn't, it's equally as important as when it does. I'm glad you pointed that out, Trading Research. I thought about kind of bringing that up, because I'd sure love to see an opportunity down near that longer-term breakout level down below where we broke out yesterday. Starting time for CL market profile, volume profile, 8 a.m. Central till 1:30 p.m. Central. Juan. Now, if you're, East Coast, you're going to have to adjust that 9 o'clock to 2:30. And if you're out west, it's going to be a lot earlier. All right. Let's take our deep breath and be ready for the trading day today. I'm looking forward to seeing some pretty good opportunities. Be looking forward to seeing you at group coaching and seeing you on the recap today as well. It would be very fascinating to see how these markets turned out. I'm hoping to get my dream level against the breakout area that we broke out of yesterday in the S&Ps. We'll see what happens. Take your deep breath. I hope you guys do that. It always seems to kind of center me, and be humble, grateful, and creative in your trading today. I'm looking forward to a good trading day for all of you. I'm looking forward to a good trading day for me as well. Say a prayer for peace in the world and yourself. Be kind to each other and yourself, and trade well. I'll see you in the proverbial trading pit in a couple of minutes, and we'll see you at group coaching at 1. Trade well.